Hi, my name is Mark Seymour, co-manager of the Northstar Managed Fund, and this is an update for the third quarter 2024. The fund performed really well during the quarter, slightly outperforming peers, but a really strong performance on the back of strong asset price drivers. Coming out of the second quarter, the positive election results, improving growth metrics, improved energy supply, and then also set against a backdrop of moderating inflation, allowing central banks to start embarking on an interest rate cutting cycle. All these factors really coming together to drive asset prices. We started the quarter out at quite an elevated local equity exposure, larger than peers, with very compelling valuations, intrinsic value discounts at very wide levels, and particularly the financial space. So we saw very strong performance from Standard Bank, FirstRand and ABSA. Outside of that, we had strong contributions from Naspers and British American Tobacco. And then along with that, we had strong performance from Pepkor, Mr Price and Remgro. In terms of our local fixed income exposure, we started the quarter out on very compelling valuations as well. The 10-year point in the curve being trading above 11%. During the quarter, those bonds did rally really hard, with yields coming all the way down to below 10%. And with that, the exposure with the net component of the fund, a large portion of the fixed bonds have been shifted into inflation-linked bonds on very attractive yields. Looking at the offshore component, that currently sits at 1/3 of the fund, and just over half of that is in global equities, where intrinsic value discounts also look pretty reasonable, but certainly a lot thinner than we started the quarter. But in terms of expected returns, still nicely above our hurdle rate. The balance of the exposure, offshore exposure, is to short-term US Treasuries and some longer-dated US Treasuries, but largely that exposure is also US Treasury based, with a more recently extending duration there as yields have risen over the last couple of weeks. So as we currently stand, the portfolio very nicely well diversified. A third of the fund exposed to offshore assets, the other third to local assets, and relative to peers, the equity component is slightly larger than peers, and valuations still remain very compelling. So all in all, a very nice portfolio for an investor seeking an inflation plus 5 target.